Good afternoon, everybody, and happy Expiration Friday. Today, on Friday, May 16th, 2014. So, like I said, today was Expiration Friday, so I want to go over a couple of different positions and how I had to manage them on expiration today for our head trader, Andrew, while he was out of town building houses for the less fortunate in Nicaragua. So I was managing his book today and his expirations, and there was two positions that required management on the close. And the first one was JOE, St. Joe Company. So Andrew was long 50 of the May 20 strike calls. So going into the close, I knew that these calls were in the money and would be exercised on the after the close and would have a resulting stock position on Monday. So I have two options. I can either sell out the calls or short stock anywhere above $20 against the calls that I am long. So what did I do here and why? I elected to sell stock and actually shorted 5,000 shares of stock at 20.48 against those calls, rather than selling out the options. And why is that? And the reason for that is that Joe options are relatively illiquid and the market was 10 cents wide. So rather than giving up that edge to the market maker going into the close, I elected to short the stock. On Monday, I will come in and there will be no resulting stock position in my account. Rather, 47 cents will be my exit price, my effective exit price on these calls. So looking at another one that we had today, BWLD, Buffalo Wild Wings. Andrew was long the Buffalo Wild Wings 140, 150, 160 call fly for May. So anywhere above 140, I knew that those calls were going to get exercised and again convert to long stock. I actually elected to sell out the calls, the 140 calls that Andrew was long here at 43 cents. And the reason that I did this, or was able to do this, was because the markets in Buffalo Wild Wings were much tighter. So when looking at expiration, it's always important to realize how tight are the option markets, how tight are the equity markets, which is going to give me the best fill and the most effective, cheapest way to exit this position. And in one case, it was the stock, and in this case, it was the options. As you can see, the calls would have went out at 69 cents. I actually exited a little early because I had a relatively busy expiration to manage. But again, two different ways to exit positions on expiration, both taking into consideration how wide and how liquid the markets are. Thanks for watching, and once again, this has been James Romelli from KeenOnTheMarket.com. Friday, May 16th, 2014. Everyone have a great weekend and happy trading.